Welcome everyone, my name is Vlad Karpel and I'm Tradespoon founder, and to my left I have Joe Cusick from Trading Block, and now we want to turn our attention to previous picks that we recommended at Tradespoon. This is where we break down the logic and give you the insights into our previous trade recommendation as far as adjustments or as far as any ideas of how to add new picks. So I want to take two names we covered in the previous trade recommendations. One is the Footlocker and one is the American Eagle, ticker symbol AEO. Let's start with the Footlocker, ticker symbol FL. FL has demonstrated a pattern of neutral to positive technical signs, and it looks undervalued at the current price level. Footlocker has exceeded one and met 3 of the last 4 earnings estimates. Footlocker's strong financial performance has so far reflected accordingly on the stock price and our conviction list. We expect it to continue, so our overall score for Footlocker is 8.2. We just updated the score from 8.2 to 10, both in the long and short term for Footlocker in terms of our convictions. Taking a look at the probabilities of the stock trading between certain levels, we have a 60.36% probability of Footlocker trading between price levels $61 and $51. So Joe, do you have any insights on the Footlocker?
Yeah, all right, Vlad. Now, you have to see that given this range that Vlad just gave you and the probabilities, let's take a look at some of the Tradespoon picks that you had and you dished out earlier the last couple weeks. First, we want to take a look at the stock trade. You opened the stock trade at 56.96, and the profit and loss target was between 64 and 48, which statistically over the next 50 days has less than 15% probability of reaching each one of these levels. Now with the Z-score, that's that level of implied volatility that we want to look at. It's at a 0.96, which means that the mean right now, that average, the current IV is almost 1% higher, or 1 point higher. This is telling us that the options have priced in the potential for some significant violent moves, which makes sense since we have consumer credit upon us and we're going into the new earnings cycle. So if you have a short-term move, manage this tightly. You know, the stock's a little bit off from entry. So one thing that you could do is if you're in the stock, manage it tightly with your stops, move the stop up when the stock moves to the upside, take an opportunity to maybe take profits, especially if you have a quick, big move to the upside. Now, taking a look at the options trade, you suggested the no $52.50 calls at 545. You need the stock to hit 57.90 for break-even between now and November expiration. And there is about a 76% probability of touching that level, but only a 36% probability of expiring at that level. So keep an eye on that. Time decay is going to be your enemy on that long call. I would either cut the position if the stock just sits here and starts to grind over the next week or two and just get out of it. Save some capital there. What I would also do is look to potentially sell the $57.50 call and spread off the remaining time and volatility risk that you have in the position on the $52.50 calls, which gets us into the spread trade. If you initiated the spread trade at the $57.50 by buying those and selling the $57.50 calls to offset that time and premium risk, you did the spread for $1.55 back a couple weeks ago. It's still trading right around that level. So this is the one that's least affected by the small pullback in the stock. You need some more time for the stock to move to the upside. But if it gets up close to that 57.5 level, you should be looking to pull this trade off, especially if it does it fast. Take an opportunity, but be patient.
It makes sense. So we have 2 services. One is the premium service where we provide 1 recommendation a day, and we also have an elite service where we provide 1 recommendation a week. We both provide bullish and bearish strategies. So now I'd like to turn our attention to one of our bearish picks, ticker symbol AEO. American Eagle has demonstrated a pattern of, again, neutral to negative technical signs, and it looks correctly valued at the current price levels. American Eagle has met all of the 4-quarter earnings estimates, and AEO has been plunging for a long time, and it's at critical support level at around $10. It is now hitting previous resistance roughly at $14.50. So you see this overhead resistance, and the short-term future of the stock will be determined at this stage whenever it can break this critical overhead resistance at $14.50. So currently our overall score for AEO is 5.5. Taking a look at the probabilities, the stock has a 76 probability of being between $17.50 and $12. Joe, how can we use the previous picks from 2013 in formulating some of our ideas?
You know what, this is a great idea. As you can see, the previous pick is up on the screen. And you know, Vlad, having the stock, having updated both the fundamental and probability analysis that you showed, let's take a look. In September of 2013, you had a similar bearish view. The stock was trading around 1690, and today it's trading around 14.5, and it's right at that resistance, right off of those previous highs that we saw where it pulled back and tested 10, which was that low that you described. Short stock traders, if you're in this particular position, you got to stop at right around 1650. In other words, if the stock gets through 1450, it's going to really start to challenge for those previous highs. If, in fact, you are in the short stock position or you decide the short stock at 1450, start looking at taking profits at right around 1350. The risk reward doesn't make much sense if you're saying, well, I'm going to risk $2 to make $1. But going into the critical numbers that we have right now with the consumer credit and earnings, and then the retail sector is moving, but it hasn't been leading. There's about an 84% probability of touching 13.5, and if we can get that quick, take the profits. But we have to respect the momentum above 14.5 because there's still a 71% probability of touching 16.5. And that's about all the upside risk that you should be willing to take. Now, taking a look at the November options, the No 15 puts are trading for around $1. And there's around a 77% probability of touching the break-even point, in other words, at 14. And only about a 56% probability, of touching 13.5. So I would look more towards the spread strategy than either the short stock or the single leg. This is going to cut your premium risk and your break-even point to 14.5 on those $15 puts. So if you take the 15 and you can either look at the 15.13 or the 15.14 spread, do that for 55 cents. You're looking at a lower barrier that you'll have to get through to potentially have a nice profit, and you still have a decent probability of touching that $14 level at right around a little under 70%. And so, again, I would look at the spread trade if I'm going to. And also, this is how you can use some of the previous picks and the mechanics of that. Even though the stock has changed, the fundamentals are still there. Your ratings were bearish. Your technicals are showing bearish. This is a great opportunity for folks to look back and how you can utilize the previous picks.
Yes, and if you look at our recorded webinars on the site, you will see that we are advocating the use of statistics and financial analysis. It is important to have a conviction based on the long-term and short-term trends and ratings, but ultimately you have to look at the statistics, you have to look at the past 50 days, and you can see what the probabilities of stock being at a certain price level when you structure your trade, whether you get into a position or whether you get out of the position. So I encourage you to look at our recorded webinars where we talk about probability calculator and how to find these statistical analysis for each of our trade. And for every trade recommendation that we do at Tradespoon, if you look at the probability calculator on one of the tabs, you will see that we are doing this research for you, and we show statistical analysis, both historical volatility and implied volatility for you. So thank you, Joe, for your insights, and we will see you next week.